Hi guys, this is Gettess with the Market Sense for the week of June 26th, 2018. The charts in this presentation are provided to us by Gettess and their Trade Navigator software. And we're looking at a weekly bond market chart here, and you can see the big picture as it's been trending down because obviously the Fed wants to raise rates and bonds move opposite to interest rates. But this kind of looks like a suspicious spike low taking out the previous low that get reversed here, and they're, sideways at worst at the moment, and the last few weeks are kind of trying to go up. The volatility is shrinking tremendously, though, and that makes this week kind of difficult. The resistance in the mid 144 range up here, which they have already been to, and support only about a point lower, 143, 15, 16 in that area. Hard to anticipate any more than that. You'd like to, or I'd like to see them go test this old high here at 145.28. Whether they can take that out or not would be the most interesting long-term development, but without doing that, you have to assume they're still sideways, which makes the support and resistance very close to each other. They could possibly break down this support's 142.12. It's not that much lower. And that, of course, would still leave this just sideways, so no big deal if they do that. But again, I'd really like to see them go test the high. I'm just not sure I can see a catalyst to drive them up there right now. It's hard to anticipate much movement here, which is frustrating when you're trying to find something to make money with. Stocks have a much different situation. It looks like they've broken down through all kinds of support here, right? We were looking at, let's call this 2735 area. It's between 30 and 40 right in there. They've obviously been well below it and are still below it, but the spike down here occurred basically on fears of tariff talks, and we're going to crush the economy because nobody can buy anything, and China will out-tariff us, and I don't like moves that occur for obvious reasons, and this big breakdown was for an obvious reason, so it's not going to surprise me a lot if they come back up. Of course, at this point, it's broken. So that being the case, they could go substantially lower. I think the next area down here is around 2678 near this old low here. That would be the next target if they do continue lower. Won't surprise me if they turn back up, though, and just sort of ignore all this garbage that occurred on the obvious news. We're looking at roughly 2769.70 here is the initial resistance if they do get moving back up, and 2789.90 up here is resistance. Wouldn't be a shock to see them take out 2800. Since this low, they are making higher swing highs and lows, and that's how markets trend up. The only thing is this move up is occurring within this big sideways pattern that we've been talking about, well, for almost the entire year. So can't make a whole lot of that, and this does look like maybe 3 swings up. Maybe. That's a stretch to count it as that, but 3 swings often ends a move. Not that they can't go 4 or 5, it's just 3 has a tendency to end it. But if they can take out this high, and especially go back and take out this high around 2810, well, then you'd have to assume they're going to test the highs, which would match up with the upper Kellner channel, and that'd be a real interesting area. But boy, we're getting way ahead of ourselves if we think they're going to go that far. Right now, we're just going to see if this breakdown is real or if they're just sort of going to spend the week recovering from that since it occurred on kind of obvious news. So that's what we've got for you today. I hope you can find something profitable to get yourself in.